Hi, everyone, and welcome to our LinkedIn Live event. I'm hosting these events probably every single week, and today's topic will be venture capital landscape in the United Arab Emirates. The big competition between UAE and Saudi is happening, and honestly, first, I haven't believed that, but clearly I see it living 3 years in GCC. And this is why, for people who are choosing to land their operations in UAE or in Saudi, and probably planning to visit the biggest tech event in United Arab Emirates, which is GITEX, and which will be in 2 weeks, October 13. I want to shed light on the topic of fundraising in Dubai and in UAE in general. And for that purpose, I invited great experts with hands-on experience who can share their wisdom and knowledge on how to navigate when you're in UAE, if you're a tech startup founder, or if you're a GP. And that is why today I will ask several questions to each and every speaker. And then after that, you guys who are listening to us today can also send questions, and I will read them to every single speaker. And so let me first introduce our speakers. And Vijay, you would be the first. Vijay is managing director of Techstars. Techstars is the biggest world's accelerator, very famous. And I also invited Sharif. He's my friend, and he's startup founder, very successful company, Subspace, who raised previously several rounds of investors here in the region, and right now open the next round. And Dolly, she is GP of the fund, and she would probably share her experience of being a female founder of a fund and also first-time GP. And welcome. My name is Ginia Hasis. I'm angel investor and fundraising consultant. I run investment firm. We help companies to secure seed and Series A in GCC. And day to day, I'm helping companies to raise $2.5 million to $10 million round. And for some companies, it's very difficult. For some companies, it's a little bit easier. And so that's why I really want to share my experience as well after everyone of our speaker can share their experience. And so let's start with Vijay, with you. And first of all, I really want to know what has changed lately in, let's say, in the companies that you see right now, and in industries or technologies in Techstars. Is there something different comparing to, let's say, 3 years before the pandemic year or right now? Can we start with that?
Yeah, firstly, thank you very much, Gina, for having me on this wonderful live session. Happy to be speaking from Dubai today in the context of what's happening here in the MENA region. Just for context, I do represent Techstars for the region across Middle East, North Africa, Turkey, Pakistan. And what is really interesting, there's been a significant shift in the last 3 years on several fronts. I think one, we all know all too well that the fundraising environment is not as robust as it was, say, 3 years ago. And there is a lot of headwinds that startup founders are facing. Second is that there has been a ground shift in the technology applications, specifically with AI. And we see increasingly a shift in those sectorial sectors that's creating more interest, such as AI applications in the region. We also see that there's an increased influx of technology giants playing a role in the ecosystem. For example, we've seen an infusion of investments in G42, which is an Abu Dhabi-based enterprise, in collaboration with Microsoft, investing $1.5 billion. We've also seen a shift in the changing environment here, particularly in the UAE, where there is a lot of favorable uh, changes to allow startups to operate in free trade zones, attractive, um, residency visas, and as well as support from the broader ecosystems, whether it's mentoring investors that have expanded dramatically over the last 3 years, in part also because there is an influx of inbound family offices, VCs, private equity firms, creating a whole interesting dynamics. So clearly, 3 years ago and today, coming out of COVID and today, it's a very different environment. And this opens up both opportunities and challenges that we can dive into. But I just want to start with that. Um, One thing that I just would just end on is the idea that the competitive advantage with the UAE specifically is its ability to act as a gateway between the East and West. It's increasingly seeing a diverse talent pool and a diverse access to capital that we've never seen before. So capital is not necessarily representative of homegrown VCs or angel investors, but it is a international mix of people coming here, setting up shop, and bringing access to capital in different shapes and forms. Also, I think, just to add that when we think of the ecosystem on the broad level, we tend to see a scattering of different economic zones or tech hubs. But more increasingly, we're seeing, in the case of Abu Dhabi, Hub 71 is playing a major role in anchoring what is better known as the tech uh, destination or tech startup destination. So, putting all this into perspective, we are seeing a really different shift than what it was 3 years ago. And of course, we can dive into very specific discussion items.
Thank you, Vijay. And can you tell me, uh, like, do you think that it's harder for companies, let's say for pre-seed companies to raise right now? And actually, being a startup accelerator, do you think that the shift in the ecosystem right now goes to funding more late-stage companies compared to early stage?
So, for context, if I were to take the end of 2021 or 2022, and I would just focus on UAE for a moment, we've seen about $1.5 billion raised in total capital um, in this country, which makes it the leading destination for fundraising. That being said, has dramatically shifted the last 36 months, where we've seen a significant decline in total capital raise, and I think the number is around $750 million plus or minus. That's about a 50% drop than what it was in 2022, about a 30% drop from what it was in 2023. Um, but when you unpack that, Genia, while the gross numbers have declined dramatically, we've seen that the mega deals are the ones that are mostly greatly affected. So those are raising, Series A, B, and growth capital. That we've seen a major decline. Whereas when you break it down into seed and pre-seed stages, I would dare say that that has remained somewhat consistent. In fact, I think in pre-seed stage, we've seen some increase in transactions. The space that we are focused on as Techstars is obviously pre-seed. Typically, this is the first institutional check that will be raising. This is where they'll raise the first $250,000. That has been actually quite robust, and thanks to not just the evolving ecosystem, we see a lot more players such as incubators, accelerators, government-backed initiatives and programs across the region here, KSA, especially, and of course in Egypt and elsewhere. That has seen the consistent uh, energy and momentum where you see that growth. And so I think I would dare say that today, if you're a startup founder and you're looking for your first raise of capital. It is not as hard as what the impressions the media is giving. That's the hard climate. Capital is available. The only caveat I'll add to that mix is that on the flip side of the coin, there are increasingly more companies being created. There's more disruption taking place. And so invariably what you're going to find is there's more competition for capital. And so from my position, obviously it's privilege to be in where you see for every one company I take in, say 3 years ago, I might have 100 applications. Today I might have 150 applications. And that is a big shift over the 3 years. There's also to say that there's more companies interested to come to this region, specifically the UAE, and raise capital.
Great. And let's say, because I had a lot of different conversations previously during the last several weeks, because people are asking me if it's actually great timing for them to come during the GITEX to understand how UAE ecosystem works. Let's say I had a conversation with a startup from Finland. They just launched their company on the product hunt, their first revenue, and he asked me, Junior, do you think it's great time to fly to UAE and raise capital here? And another conversation was from startup from Argentina. They have some revenue, and they also think that for them, they really want to discover this opportunity. And I think that in general in the world, people think that UAE is one of the probably best ecosystems to raise capital. So what would be your advice? Let's say, is it several specific sectors people need to understand that, let's say, this sector is good to match with your ecosystem, this sector is not very good, or also metrics wise or different other criteria, how people need to understand that, yes, this is a place for me in UAE, or maybe not right now, or maybe for me it's better to fly, I don't know, in Saudi and raise there. So what are the criteria for the startups?
Yeah, I wanna start by being controversial and say that I think that's factually incorrect to say that this is the place where you should fly in and raise capital, whether it's the UAE or whether it's KSA. That is not correct. I think it's safe to say that you can raise capital anywhere on the planet, so long as you have the right product market fit and you have some relevance to the local environment or the regional environment. In other words, if you are, let's say, a Danish company, three founders, but you're coming in because you have some phenomenal technology that's solving the water problem or energy issues here in the Middle East, but you choose to decide to establish your roots here and to be a UAE company and address the problem sets in this region, then yes, because what you're effectively saying is that irrespective of your nationality, your background, and where you grew up with, you're basically evolving to be a regional player. And by that, it also, by definition, has given you that relevance to the marketplace. Remember that investors are always looking for, from a lens of a certain set of theses. And most investors and VCs that I know of will say our scope is really focusing on GCC countries or MENA-based countries, or very specifically KSA. And so, and once you have that being understood, you then quickly get to know that you need to be part of the ecosystem to be able to raise capital in the right way. So I think that's a myth, and I think that we need to be clear that that remains as a myth. Now, you mentioned about GITEX. I think if I am an outsider coming to explore and to build connections in the region, then GITEX is a superb platform for anyone to come in to build those relationships. Because really, rather than trying to build connections at a slow pace, GITEX gives you access to not only the fantastic ecosystem players, the enablers like Hub 71, or also the VCs that are very present in this region, but also you have the connections around the founder community that operates here that gives you a sense of reality, what works, what doesn't work. And so I think participating in platforms like GITEX actually is really helpful, but it's not to kind of set the expectations. It's not a place that you can kind of raise capital overnight. It's not going to happen. It's merely a platform for you to understand the landscape, understand the opportunities, the challenges, build the connections, build the relationships. And it can only take multiple visits and multiple touch points to establish a clear standing relationship with any investors to only begin the journey of fundraising. So that's just to correct that perception. That's what I would say to any outsiders looking in.
Yeah, I also think that there is a lot of myths about that, and that's exactly why I asked this question to hear what's your opinion about that. I think that probably my last one will be, I really want to know what is your, let's say, give us the helicopter view about the whole ecosystem. Is there enough of everything here to grow up enough unicorns in UAE to actually form the M&A market as well, and the future for someone who just launching their company here? Or we really need to focus on some areas uh, to grow up and to build?
I think relative to global markets, more matured economies, the US, the UK, Europe, Japan, and rest of the world, the capital markets are still very small here. And so the uptake in terms of M&As at growth stage, it's going to be challenging, at least in the near future. But there are some success that we've seen in terms of exits. I mean, we all know the well-known stories of companies like Kareem, Kitopi, Fetcher, you know, Angami, and so on and so forth. But what I'm more particularly interested from the lens of a pre-seed investor is that there's a lot of trade sales taking place, even in the very early stage of the journey. So whether it could be at seed stage, Series A, and that from the founder's perspective, as long as they find that that's a good exit that materialize their objectives and mission in building that business, and from the LP's perspective, or sorry, from the investor's perspective, they can capitalize the principal at several multiples, well, that's a win for the stakeholders. And so that's one perspective. The other perspective is that I think it's an excellent location when you think about certain sectors to actually find product market fit, grow the business, get traction, raise capital, get the validation, and then scale for the world. Angami is a good example of a homegrown entity, has just done that. We see a lot of software B2B companies too, at some point might decide to pivot and take the company to be based out of the US. One good example is Vivo, a company that we invested, which is a healthcare company, is valued at about north of $50 million. Came here to Dubai, built product market fit, and now it's a product that is serving the world in 25 countries out of San Francisco. We see a lot of examples like this, and I think that is where the opportunity is available. I'm excited about, because of the abundance of talent that's coming into the UAE, it provides a eclectic mix of opportunities and mix for founders to build great companies. They don't necessarily have to build companies for the UAE. They can build companies for the region or for the globe. Just finding product market fit here could be a good starting point. And we will back these companies. We feel that the founders have that sustained energy to carry that vision through. And so I'm not restricted from my interests just because they have to build a product for the UAE.
Great. Thank you, Vijay. We actually have two questions here, but I really want us to move to our next speaker, Sharif. And then after that, we will come back to questions. Sharif, my question to you, because I know that you're raising capital right now. How is it going so far?
That's a good question. So I'll have to carry the flag for all my fellow founders, and as Vijay said, I'll be a little bit controversial. I think, in all honesty, there is no one way of fundraising. You hear a lot when you're starting. This is how you fundraise. You reach to investors. You build a pitch deck, etc. That definitely is part of the process for sure, but there's a lot that goes that also helps in fundraising, as mentioned, the right network, the right introductions, building the right things, understanding the product market fit, understanding which markets you're working in, and it really is a very challenging process because we always say there are funds available for founders, but founders always say, how can I reach them? So there's always this gap of VCs saying there is money and startups saying there is no money. And I think the gap exists because there's a lot of things that you have to go through in fundraising that are unknown for a first-time founder or unknown for someone in early stages that they have to do, from a networking perspective to a soft landing program, for example, etc., etc. That kind of enables you to do so. I will share one insight since you asked about what we're fundraising right now. The only insight I'll share about the region is it's kind of a little bit negative, yet I do believe UAE is a great country to fundraise in, is that part of what we're doing this time was cold outreaches to investors, right? To investors who we did not know or did not have any network. We did around 700 emails. The only responses we got were all from non-regional VCs. And the response rate was very high from Europe, from the US, even from Asia Pacific, as in above 50%. And we only got one reply from the region, which also shows a couple of things. One is the amount of staffing also that the VCs have. And as we grew as a company, we started to understand that a little bit, is that even though there's a lot of funding and a lot of very big VCs that do exist in the region, a lot of VCs are still understaffed in a way, but also the competition is very, very high in the region. And because there is some sort of branding that's happening around UAE is a great country to fundraise, or Saudi is a great company to fundraise, there are capital available, but there are so many startups competing on it. So you never know who's gonna get the hit and who's not, and who's gonna read your emails or not, etc., etc. So that's kind of an insight I would like to share from our process right now, is that most of the outreach that we always do, we always get great responses from outside of the region, even though we are a regional company. For us to be able to hit the regional VCs, we usually have to get intros in order for us to actually have a conversation and start discussing with them. And I think that's also one thing that maybe VJ started talking about, which is going to GITEX and getting the intros is great. And I'm a big believer in that. But also most of the ROI that we get as founders from something like GITEX is from the side events, where it's more smaller. You have the VCs, you can have some time with them. And if you're not part of the network already, you will not have access to these events and you will not know that they are happening. I think that's kind of where the gap starts to appear, which is, how can I be part of this? Or how can I get an intro? How can I get in front of that VC? I think that's the first question, because the cash is there and the money is available. Even as Vijay said, maybe 46% less investments in terms of size, but it's great news for someone our size, because the number of investments is actually increasing, which means that the focus is on early stage, seed, pre-seed, and Series A, where you're actually building and growing and doing your product market fit and kind of hitting your growth stage. So, and that's where we always say this is the valley of the death. This is where most startups die, where they're trying to do this. So how can we make sure that we match both? I think that's the question in hand.
Yeah, I would probably add here that just because I have experience of raising capital for different sectors, different stages, different industries, we know internally in my team that everything is changes every single month. Let's say we have a database of game dev venture capitalists, and we're sending cold email outreach. In June it works, in July it doesn't. I don't know why. But in general, there is several instruments how you can reach out to investors. It's either email, or it's LinkedIn, or it is WhatsApp. And WhatsApp numbers you can receive from the application called Lasha. And only in our region, it actually works that you are just cold calling with investors, or let's say texting them on WhatsApp first, and then after that you're calling them. People here are super genuine. They really pick up the phone, they talk to you, and then after that you have the opportunity to send the pitch deck. In Europe it's quite the opposite. So I would say that just test different instruments, test different channels. And yes, definitely, 100%. I think that investors here in the region are receiving tons of emails, especially if they are tier one VCs. My next question, Sharif, to you will be also, can you compare your experience in UAE and in Saudi?
Okay, yeah, some people might kill me, but yeah, let's go for it. So, no, to be honest, I really think that if you want to call it competition or if you want to call it growth, race, whatever, is very healthy for startups actually, because that allows a few things. That allows for the first time, you might actually have a few options of investment, but also you can compete. You have choices. I think also the Saudi market has a specific dynamic that's for its own. So there's a lot of decisions you have to make as a founder in processing this, whether which one is your main target market. Do you want to grow in Saudi or do you want to grow in UAE? Maybe we're seeing, in my personal opinion, I think from math of startups, technology, and basically even stages of startups, maybe UAE started much earlier than Saudi. So now we're seeing a lot more companies, a lot more growth. But the acceleration in Saudi is very intense. However, my personal view is that this is where we're starting to see a very interesting shift where UAE is focusing more on pre-seed, seed, and Series A. We're seeing that in my perspective as founders. And the larger deals are going into Saudi. We're now seeing much bigger deals happening into Saudi with very high valuations, etc. There are definitely seed and pre-seed investments, but not as much as UAE. So I think it also depends on the stage and which market you want to penetrate. For us, this competition is very healthy. But what I would also kind of advise founders, I basically still in the journey, but at least that's when we went through our journey, is that trends don't last. So regardless what you're building, you should not follow a trend because there you have an investor in UAE that's saying this or an investor in Saudi that's saying this. You understand your product, you should understand your market and see which fit best. In our case, for example, we do have great investors in UAE, we have great investors in Saudi. We're working in both markets, but we're doing that diligently. So at the end of the day, and I'm saying this again very transparently, there was a season I was calling the season of migration, where if you went to Saudi and Riyadh, you will see every single entrepreneur in the Middle East. And that also is not healthy because, again, a lot of competition, a saturated market that is in its early stage. So we have to be smart on deciding what makes sense for us as entrepreneurs and which stage we're in. I think as a market, especially as a consumer market, Saudi is a very interesting market. But again, the innovation we're seeing in UAE is also on a different level. So it depends on what startup you're building and what's your target audience. But at the end of the day, this kind of friendly competition, I would call it, is very good for us as startups.
Okay, great. I think I have a last one for you. Maybe you can share very quickly what you do, what your company is doing. And do you think it is possible for you to build a unicorn here in UAE?
So that's a question that has been answered with a track record, right? So there are unicorns that were built in UAE. So this proves that this happens. But I'll go to I think an amazing point that Vijay made, which is the exit. There is a certain stage in the life of a startup in the region that's very tough because you are at a stage that you're very hard to acquire and exit at this, let's call it even 300 to 500 million valuation. There's no regional player that would actually go for it. But I think the unicorns that will come moving forward are from regional IPOs. That's again something that we're seeing a lot happen right now, whether in Saudi or in UAE, which is basically how can we take local and regional companies and IPO into our own stock market. And I think the stock market in both countries is also thirsty for innovation-led companies rather than also the traditional businesses. We're seeing that right now. Hopefully, with the startups that are now announcing IPOs in both countries, we will see how this would work. But one of the paths that, for example, even us, we believe in is that a regional IPO is a very great way now to exit, and it is a very valid way, and it might be even more valid than what we all dreamed of, which is ringing the bell in Nasdaq, right? But now this is becoming much more valid. This is becoming at valuations that can be 1 billion, 2 billion, 5 billion if you're performing well. And I think that's why it's becoming much easier now to have unicorns, because there are funds and holding companies and investment firms and PEs that are regional that will support you at that stage to take you to IPO. And I think that's what's new, because between that valuation of 300 to 500 million, no one knew how they would be able to exit. But now there are vehicles that can take you at that stage and take you to $1 billion.
Great. I hope that we will still be friends when you go to IPO. Yeah, we should.
I'll exit anyway, so let's see.
Yeah, of course. Let's move to Dolly. I really enjoyed our conversation previously last week. And me personally, I think that my next step in career would be definitely building my own VC. And that's why I'm super curious watching how you are doing that. I invested in 3 companies so far and 3 venture capital funds. My focus is deep tech. And I think that, let's say, in several years, if I show great track record on this investment, I will be able to raise my own venture capital fund. Dolly, can you share your experience, how you decided to become GP, first-time GP, and how it is going?
Firstly, thank you, Genia, for having me. Really nice and really interesting to hear both Vijay and Sharif's thoughts on this. And just to quickly, before I answer your question, is if you're thinking of doing it, please do it immediately because it's the right time. You're already, working on that. So just to, in terms of clarity about myself as to why I got into this. So I have been an operator working in the region between Oman and UAE for a good 17 years. So I had a good understanding of how this region has evolved into what we have seen startups come about and investments come about, and how, to put it very lightly, regional players think, whether they are building businesses, whether they are investing into businesses, or whether they are scaling and growing out of this region. So this was the understanding basis on which prompted me to start our own fund, focusing purely on 2 things: early stage, similar to what Techstars does, and we have a lot of early stage, matured funds in our region. And second, to basically utilize my operating background, which was focused on fintech or financial services in our region, and then use these 2 as niche and launch a fund which will do exactly that, which is investing in the region, investing in this specific industry at this stage. So just to very simply answer, that was what prompted me to move into GP. Having said that, I'm again paraphrasing what you said, that you've been building your track record over the last few months, for years. And one thing I did notice, which was a pleasant change, and we always think about venture capital or starting a fund or a GP, that it has got to do a lot with track record, and I agree that that is the standard norm. Having said that, I did experience personally a very gradual shift, moving from pure investment track as opposed to operating track. So a lot of other VCs and GPs that I know, who may be working with established firms, but themselves came with background where they had done just a handful of deals, but they had had a lot of success in identifying either is it a matter of sourcing or helping them grow, scale, until they can take them to an exit. So I think the mind shift is there from probably global allocators or even regional allocators to see, not limit it or not limit the purview of a GP or a VC purely on the track record of investing versus the track record of actually operating and seeing the other things that happen in the life cycle of how they supported a startup. So that's what again, just to answer your question as to how I'm seeing personally the region. In terms of new fund or emerging funds or new VCs, what I did notice is we've as we know, venture capital that way is pretty new in our region. So when I say pretty new, it's matured over the last 10 years and more over the last 5 years. And during this time, the early adopters of venture capital were the large allocators, global VCs coming up and setting up shop here, sovereigns, of course, or large allocators investing into this. What we're also seeing is a shift into micro VC or micro fund strategies, which are very specific to a certain sector, a certain region, even a certain business model sometimes, which could be purely SaaS or purely consumer. And that also provides a specific niche because you get to assess, source, and then service and value a particular sector, which is very specific, in your expertise. So these were overview of probably 3 things that I observed in my journey of shifting from an operator to a GP or venture capitalist.
I actually noticed a trend, and I really want to discuss it right now. And I think that's also would be very interesting for founders who are raising capital, because they really need to understand what is actually the business of the GP, and what is the requirements, and what's the relationship between GP and LP. And I noticed it specifically in this region and in UAE specifically, that let's say if you're a GP and you're raising capital from LP, and you offer this LP several different variants how to manage the capital. Let's say this is one pocket and there is certain risk and return ratio. This is another one, let's say venture debt pocket, right? And this is another one. So let's say I invest your money in pre-seed with this risk and this appetite. So how's it going? Because I know that you have a little bit different offer for your LPs and your own vision. Can you please share it with us?
So fair question, Jeannie, and it's good for founders also to understand as to how the VC chain goes. So probably I'll break down your question into 2 bits. So the first part, where there is a multi alternate investment strategy that a lot of VCs are adopting, but I feel that is the right instrument for more larger players or larger VCs who are launching funds which are upwards of probably a couple of 100 million. Because what normally happens in that business is, let's say for sake of simple example, if a VC or a GP is launching a 100 million fund, you want to identify different risk that appears in different alternate investment themes. So you would allocate a small pool of that towards venture capital. Under that, you will allocate small pool of that in equity. The other would be towards debt. The other words, so there are multiple instruments, and a lot of VCs are now understanding and adopting multiple instruments within a singular fund. So we're seeing a lot of those growth. Now, having said that, this also is applicable because unless it is a very matured and structured VC, managing multiple instruments and multiple VC strategies within a singular fund doesn't always work unless it is an established and a mature fund. Now, in our case, because first it's a new fund, it's a solo GP venture, I personally wanted to go in with a very specific niche to do purely equity or purely convertible safe kind of investing. So when reaching out to our limited partners, our investors, we have to convey a very specific strategy that we intend to invest into. That this percentage of the fund is being invested in so and so stage with so much of an expected return. There is always a demand to ensure that there is sufficient fund allocation for follow-up investment, which is, which works with him, because every time any VC in the region is investing globally, you'd always want to follow onto that investment once that particular startup matures. And it makes much more sense for early stage, the stage that we focus on as well. So this is another thing. And to also answer your question about the relationship between GP, LP, or fund managers. So the bottom line is that fund managers, general partners are the fiduciary of limited partners in a way, right? To put it in a very legal jargon way. That when we reach out to limited partners who basically are providing the capital to invest into concept startups that we are focusing on. However, the GP, it is onus on the GP or the fund manager to ensure that they are aligning their investment in line with the strategy which aligns with the limited partner, because limited partners again look at it with a very larger scale. They probably invest some funds in venture capital, which is a new allocation methodology for them. Most of them will invest into private markets or private equity and so on and so forth. So for them it is important to ensure that if they're investing funds into a close-ended venture capital fund, they're looking at a 10-year life cycle. They're expecting X percentage of returns or X percentage of IRR over an annual basis, which in comparison should give them probably a higher return as opposed to another way of investment. So there is a lot of methodology that goes to align with the investment strategy of an investor, allocator, or the limited partner, and then accordingly become a fiduciary and ensure that the investment remit of the fund will apply the right kind of methodologies while investing into the startups. So yeah, that's to answer your question.
Yes. I think that the last one would be because you're a female GP, I really want to touch like this question of probably female empowerment. But my take on that is that the best investment in female empowerment or the diversity question could make women supporting other women. And my question to you: do you feel enough of support of some women in your circle?
That's a very interesting. And being a female founder, I think we always tend to pivot discussing about this topic. So, see, in terms of gender equality, I feel lucky, and I'm sure you as well would align as women expatriate working in this country. Touchwood, we're past the stage where we are looked at from a gender lens. And I think in terms of how gender equality has grown or matured over the last few years, that itself is the biggest achievement, that you no longer are viewed by the lens of, from a gender bias. Whether it is coming from a positive that, somebody wants to back you up just for the simple fact that you are a woman. It is now passed on the stage that everybody purely comes and, does something basis on their merit. So this is one good thing about female empowerment or female equality or women equality in our region. Second, in terms of women backing other founders, be it the network that I have exposure to who are backing our fund or us as VCs investing on this. Now, this I think is, I suppose, an unspoken rule. Women will always have a natural understanding and tendency to keep a very broader aspect of allowing everyone to either be part of the ecosystem or support that ecosystem. So I do have a lot of senior women in the region who are backing us in form of advisory, in form of purely speaking with us or sending us deals once in a while. So I do see that in terms of support. And second, and this was a very interesting understanding when I shifted as an operator to VC, that we naturally, we always get decks and, some founders pitching us. One thing which was very comforting and which was very interesting shift where that while speaking with women founders, female founders, or any team members with women on board, you automatically are giving them that additional empowerment to come and comfortably speak to you. And I've been actually told by a few female founders that they feel they get a bit comfortable to go deep dive into their daily issues as well as launching a startup while they are speaking to a woman investor or women allocator or women VC. So this was a very interesting insight, and I wish that we continue this track because women naturally are we undertake that we understand the non-work related challenges that happen in a women's life, and as long as we're giving it the right ear, the right understanding, we can ensure that the ecosystem drives and grows from there on.
Thank you. I think that I'm super inspired by all your insights that you shared, and I really want to open the floor to people who listen to us. It's 30 people so far, and we have several questions. So the first question, I will pop it up here. What are the most promising and trending fields or sectors where you see the highest potential for startups to innovate and attract venture capital in the next 2-3 years? And if any of you want to answer, please.
For a very quick, also controversial opinion, I'm of a believer that once something is trending, you're already late as an entrepreneur. So, for example, AI now is trending, and AI is big. And I'm not saying AI has ended, because we have so much ways to go. But I think if you're, for example, thinking about something in AI, you need to really do a lot of work to understand what's out there, what's being built, what's happening. Because the way I see it is, once it's there and it's trendy, there are two things that happen. Either the companies that have been working on this pre-trend, they are the ones who are now capturing and getting all of the attention, but also they have a better product market fit. They did the research, they are early adopters, etc., etc. So I think for me is that if you want to innovate and attract, you need to find what's actually not trending but brings the most value. Again, value over trend, value over product, value over anything. If you are bringing your customer, your business, anyone, the value they expect. I really like a quote that Jeff Bezos said, which is very, in a way, counterintuitive for us entrepreneurs. It was, I really don't care about what the future is. What I care about is what's never going to change. So people will always want fast delivery. They will always want products, and they will always want to order it. That's never going to change. People will always need healthcare, for example, etc. So I think that's also a great mindset, which is understanding what are the real needs and the value that you would be able to provide, rather than looking at what's trendy, because it became trendy because someone already figured out why and what's its value and where it's going. That's just my view in a bit.
I totally agree with you.
I think just to add to that, I concur with Sharif a lot. I often say that from an investor's lens, we love problems that the founders are obsessed about, so they are working to solve it, as opposed to solutions looking for a problem or solutions chasing a problem. And I think that just speaks to about how entrepreneurs are taking advantage of the current trends that are in a way thematic or trendy, such as AI. It can be quite telling to really sit down with a founder and have that conversation, to see the breadth and depth of their understanding the problem set and how they dissect the marketplace, how they're looking at this in a sustained long-term basis. Those are the founders that will be more appealing, irrespective of whether it's an application of AI or not. But that would be the fundamentals that I would tend to lean in.
Thank you. I think that another question is also very interesting. What is the multiple on investment capital does an emerging GP have to be offering? And there is another question also for probably Dole for you.
So, interesting question. Maybe I'll just the multiple on invested capital for all the founders on the call. Now, I'll just debate on the way the question is asked. So there isn't a standard offer that you go and give to your limited partners that, hey, this is what we're targeting. But we do work in a way to ensure that there is a minimum multiple that we're targeting over the course of the life cycle of the fund. Now, just to also answer your question, in venture capital, and venture capital has probably had a bad name, that realistically probably less than 30 or even less than 25% of global VCs actually return more than 2x. So 2x has been a norm, but any new emerging GP is definitely targeting much more than a reasonable 4 to 5x. And I'm talking about a base case scenario, right? And we're not talking about bear or bull markets. We're talking about base case scenarios to at least target those kind of returns, which will then align with the expected IRR on annual basis. And then this way, it also gives a little bit of room for probably worst case scenarios in case the fund doesn't perform or the underlying startups do not perform as expected. So yeah, so that would be, not to focus on the number, but that is what we usually go and speak to our LPs about.
Yeah, I think there is a lot of questions. I really want to go over every single one of them. I think, Vijay, this is also for you. What is the offering for VC to invest in? I think it's a little bit generic question. Is the idea of opportunity into potential investor or revenue it could generate in ROI?
You might get different responses from different
Yes.
VCs or investors. But I think I'll speak from the position where we are in. We are pre-seed investors, and obviously return on capital is really important. We consistently do deliver very high returns, probably more than the average VCs out there. But most of the LPs that are in our funds are actually more motivated for other reasons. That they have a sense of impact they want to make in the ecosystem. So whether you can define it as social impact, whether it's helping the ecosystem evolve, they want to start a community. There's a sense that they're investing for capital on purpose as opposed to capital just strictly for commercial returns. So I think there's a slight nuance there. And I want to be objectively clear that they're not investing as charity or philanthropic reasons. So there's a very fine line that sits in there. And to kind of drill this down for more clarity, because we are looking at timelines of 10 years, a decade, as opposed to 3 to 5 years for perhaps later stage VCs, we tend to really have a bigger risk appetite for discovery of innovation, disruption, and that needs a long time for gestation for that to get to market. And so there's a bit more forgiving. Some people like to call it patient capital, to allow for time for these companies to mature. Typically, we'll see a J curve hitting only maybe in year 7 before they got some significant product market fit, commercialization at scale, that you then get increasingly multiple returns. But it takes a good hard 5 to 7 years to really see the needle moving in terms of returns. So that is the characteristics of the kind of investors in our fund, because they do understand that pre-seed is patient capital. It's really looking at a longer time frame, not looking for returns in the near term.
Mm-hmm. Another question, I think it's for Sharif, and it's about top challenges that outstanding founders like yours face usually in this period.
I think it's both. It's for me and for them, because I think it's also I don't hear a lot of founders pitches, so it probably would be from my own perspective, but I'm pretty sure Dolly and VJ, they meet founders on a daily basis, so I think also your contribution would be great. But I think it really depends on the case. We as founders, we always complain about funding. I complain about funding as well, even though I think I'm one of the few founders that actually enjoy the fundraising process with all its challenges, with all its complexity. Yet we do always complain and worry about funding. I think the adjustment of the market in terms of trying to go more, and most of us as founders trying to reach profitability, I think that's a great change that allows us to think differently and allows us to start seeing more bootstrapping kind of companies, hopefully in the future as well. But one of the things that I think we struggle with is the understanding that things take time. And also the second thing I always say, and I'll be a little bit harsh on VCs here, is that sometimes VCs forget the word venture, that this is a venture capital, which investment possible, because the venture is what gets you the highest return in a way. And I think that's something that maybe, again, be very honest. I've seen so many entrepreneurs that are building some of the most amazing products, but they are very technical in a way. They're not, they're building something that's going to take very long time to actually commercialize, to pivot moving forward. And a lot of times, and I'm not generalizing because there are amazing VCs in the region that do take the risk, that do bet on early stage and on founders and on founding team, but also on great products. But there's a general tendency around risk aversion more in the region than other regions that we have seen. And I think that's something that founders who are building long-term companies with more steady growth rather than very fast scalability and growth, that's where we, even from other founders that I've met across the board, that's where we struggle. Because if you're building a very strong advanced product, it will take time to build it. It will take years in testing, beta customers. If you're building an enterprise SaaS, that's why we find very few enterprise SaaS, for example, in the region, because enterprise SaaS have very lengthy life cycle. It takes years to close contracts with enterprises, then enhance the product, then find the new contract. So I think that's the struggle we're seeing, is that the understanding, or we're seeing less risks on the investment side now. And I think that's the struggle for founders who are trying to build very new stuff.
Just quickly, if I can add, I'm glad Sharif emphasized venture venture in venture capital. And I'm glad he did not say adventure, because that would, really spoil the fun for both the VC and the partners and the founders. I think the key word I want to emphasize that fundraising is a relationship, not a transaction. So founders should understand that it is not going to the bank and asking for money. This is a investment in relationship. So one has to view a VC as in like a GP like Dolly or yourself as a partner. And what can the partner bring to the table in terms of support, the knowledge, the access to a community, access to a network, the advisory work that you will expect the investor to provide over the course of that relationship. So that is, I think, the frame in terms of how someone should choose to work with an investor, as opposed to say, I just need to raise $1 million and who can give me the best term sheet. That is where I think one tends to see a lot more difficulties in those relationships. And so being clear about that from a purely mindset perspective is a clear ideal to have.
Yeah, I think that was amazing. I also always face the same problem, because my role is to raise capital for startups. And I always see that a lot of companies just treat UE in general like ATM, and it's very upsetting all the time. I see that there is a question from a founder who is going to attend GITEX. And what is the advice do you have in order to prepare for in-person investment meetings? I think that Dolly, probably you can also answer that.
So Mars, I'm just reading the question. Mars, you're a founder. You can be as ready and as prepared as you already are. I don't think, just to put it very lightly, that you need any different kind of preparation to speak to an investor. It's just people. Probably what can definitely help is you giving a perspective of whatever it is that your industry, your specific skill set, your specific expertise is, be it whatever you're building, and then start a conversation based on that. I've seen that actually in my case acts as an icebreaker, because just like you, VCs are very keen to learn about new things, right? Just because we have exposure to speaking to a lot of founders doesn't mean know a lot about all of these industries. So another reason that VCs are always speaking to founders also is that, just like you, we're also learning from these new industries, about new sectors, about how new founders are looking at innovation in these sectors. So probably that is one of the best things to start a conversation. Focus on your niche, focus on what it is that you're building to get the conversation moving. And then I think it just make it more conversational. Again, like just to add to what which I said, you are meeting other people, just like you would meet at any networking event, at for dinner or for lunch. It's the same thing. It's just meeting other people and trying to have a conversation around what it is that you're doing.
I also want to mention that my company, we are organizing the sometimes tours for like discovery tour for founders from different countries who want to understand how this ecosystem works. And we introduce to accelerators, incubators, and some early stage VCs in order to help building this relationship, because there is a lot of people who just don't know which door to knock, right? And during this week of GITEX, 13th to 16th of October, I also organized the event on Yacht. That would be my first event on Yacht for startup founders. And so for those who are listening right now and interested, just please ask me a question how to join it. I think that that's about it. It was 1 hour of amazing conversation. Thank you, everyone who joined us. I really love the question, and I'm so grateful for my community, for you guys. You are very active all the time. Very engaging, and also big thank you to all of the speakers for your expertise for this time. Uh, yeah, it's always a pleasure to meet with you guys, and I hope that we are probably repeat this maybe in the next year and the next year and compare what we were talking about this and what we and let's just probably leave a quick note, like 30 seconds each, some wish to all of the companies who are just right now thinking to land in UAE and start building businesses. What would be your like go to, for them? Blessing.
Probably I'll
Let's start
start. Okay, so I think contrary to what we've been hearing in terms of time, it is actually a very interesting time to come and build or trade in this region. Definitely, I will focus on building, focusing on how the adoption of innovation is happening. So look at it as a very interesting time to create the seeds of future innovation in this region.
Vijay, the microphone.
Vijay, you're
Yeah, thank you. So I would say that there's never a better time to be a startup founder, particularly with all the foundation that's been invested by the ecosystem. When you compare to where we were 10 years ago in this country and this region, so it's a much better time. And given the dynamics of what's happening in this region, particularly where the city aims to be one of the top 10 countries in the world, the attraction of capital around the world. This is a great place to come and embrace those innovation ideals and to be a disruptor.
Yeah, I'll say that I think anyone who's I think this GITEX is a great event. I think coming to the UAE fundraising is great, but as founders, do your homework, understand which VCs would make sense. Who's your primary? I can't share much about our previous round because I would love to fundraise again, but try to understand who do you believe is going to be your primary. Build the relationship with them, understand their portfolio, why do they work with these companies, understand if they're doing side events, try to be part of that network, build the relationship. In UAE, I saw one of the posts saying that the people in the region as VCs are usually very warm rather than other regions, which is very true. That's what we said. Relationships are important. And every single one of the investors, once you talk to them, they're very helpful, very supportive, whether they want to get in or not. So it's a very different climate. It's more personal. So you need to build that relationship, but you also need to do your research to understand what will work and what will not.
Amazing. Thank you, everyone. Thank you for this energy, and see you on the next live streams on LinkedIn.
Thank you.
Bye.